Hi guys, today we're going to talk a bit about my favorite metric, free cash flow yield. It's a very simple metric, but it will tell you a lot about the financial health. And of course, if the cash flow grows, so will your yield for the price you paid. Let's break it down so you understand. Free cash flow is the metric generated after expenditures. So if you have a cost-effective company, the cash flow will increasing the metric for you if you bought it at a good price, Free cash flow yield equals free cash flow divided by market capitalization. So if price falls, maybe it's in here. No. Okay, I'm trying to find my way to work. I have about 10 minutes to explain this, okay? Like basically the yield tells investors how much cash flow they can get for the price or each dollar they spend. So of course, if you're looking for a quality company and you find that quality company, then you want to get it at a good free cash flow yield, because if you pay for say for example PayPal, it traded at 8% free cash flow yield. What does that tell you? That tells you that they have 8% for each dollar you pay, and that 8% could potentially in the future become dividend, and if they manage to grow the cash flow, that 8% actually turns into 10, turns into 12, and so on. And that can potentially be dividends or share buybacks every quarter, increasing your earnings per share and value of the company over a long period of time. So if you're a long-term investor like me, you really like free cash flow yield. It's a good metric to follow. I would say the guidelines would be like, if it's a quality company and it trades in between like 2.5 to 5 is normally where they trade at. When they go over 5, if it goes over 5, you could consider it cheap. If it's a quality company, so in short, if the free cash flow yield is high, it means the investment is attractive. If it's a quality company, you don't want to buy into garbage companies. So this is just a metric to measure the free cash flow. You also want to look at other ratios and so on. I'll cover that some other time. I have about 5 more minutes to explain it. It's all okay, let's talk about if they have good, say they are a company that consistently trades at 2% free cash flow yield. Spider webs. That's what I get for walking in the forest. Like a growing free cash flow yield for you, like say you buy a company and then 10 years later you have a higher free cash flow yield for your price. It shows that the company knows how to invest in itself, it knows how to control expenses, and it increases the potential for having dividends in the future. So if you're a real long-term investor, I would focus on this metric, especially if you're a beginner, because it keeps you away from companies that actually make negative cash flow. And I think people who buy into companies that have no cash flow or no predictable future, they are really gambling with their money. Oh, I'm on the road. Okay. So in short, if you have a company that trades at a good free cash flow yield, say 4, 5, 6%, you expect to grow free cash flow every year and be a stable grower. I would say, like, for the long term, if you trust the company to grow at a good rate, it can pay off very well for like a retirement plan. But that's the thing, you need to be able to discern if it's a quality company or not. I also think about, you want to compare it to competitors, like what are they trading at, how much are they growing their free cash flow, and other qualities like debt, how are they managing their debt, and how do they run their operations. Of course, you want to look at other financial indicators, like you don't want to be diluted, you don't want to have high debt, you want to have a company that can manage costs, and yeah, if a company manages to grow free cash flow consistently, it's a good sign. And then if you manage to buy it at a really high free cash flow yield and identify opportunities in the market. Hope this had been to some help for new investors and maybe people who don't invest and maybe look at like trading patterns. I don't know what you guys do. Gosh, I just want cheap companies that can produce in the future. See ya.